Thank you all for being here today. We just need to put this out there that this information is just intended for any general education and informational purposes. It does not represent the opinion of Bonadeo. It's really just our opinion. So if you have any questions, you can always reach out to us after the conclusion of the session. So what are we really here today to do? We'll cover a couple of different topics ranging from recent audit trends and common findings, both what we're seeing at the Bonadeo Group, as well as what's really happening at the industry at large. We'll also walk through what auditors and regulators are seeing in corrective action plans. We're seeing a little bit of an uptick in single audit findings. We've all got some resource constraints, as well as just other challenges in the industry. So with that, there's more risk resulting in different findings. So what does that corrective action plan look like? And also just how to assess your readiness before your audit fieldwork begins, whether that's related to internal controls, your schedule of expenditures, and various other items that you need to do to get ready for audit. So hopefully you'll be ready for all of your audits. I know many of you on this call have audits coming up in the next couple of months. So hopefully this makes you feel much more prepared as we get ready for the audit.
And Kelsey, I'll just chime in on that. I think the other thing we want to be aware of and what we want to be supportive of all of you is obviously there's a lot of scrutiny over the Department of Education. And so any option or availability that we can provide you assistance to ensure your compliance, obviously that's definitely where we're coming from here today, is kind of giving you a heads up of some of the issues, as Kelsey said, that we're seeing, the department is seeing. So anything we can do to ensure a clean, smooth audit and reporting cycle for you is what our objective really is here for you today, not only from the small circle all the way up, as Kelsey mentioned, to the national level.
All right, so we'll first cover a few of the hot topics in higher ed single audits. I know there's quite a bit in the higher education landscape when it comes to hot topics, but here for this purpose, we're really going to be focusing on the single audits, and not just the student financial aid, which is the major program for many of you, but also looking at research and development cluster and a few others that we've been seeing across the industry, both in privates and in the public universities. So these are areas that we're seeing across kind of in our practice related to Pell Grant over and under awarding. So what that means is most institutes of higher education will have a system in place to assist with the calculation of the Pell awards and disbursements. You're using, some IT or general controls to make sure that the awards are being calculated and dispersed properly. However, oftentimes, especially like we mentioned, where there's potential turnover or under-resourced departments, those controls are not being followed or they're being overridden by personnel. And it's usually when it comes to special circumstances. So if change in student enrollment and things like that will result in over or under awarding of students. So the important thing here to kind of manage is making sure that you have really good cross references across the Institute of Higher Education. So not just focused on the business office, but you also need to look at registrar as well as student accounts and make sure all of those groups are working together. The next common finding we've been seeing is delayed notifications to COD, and we'll cover that briefly on the next slide. Another item we've been seeing pop up more is related to the research and development cluster and the effort reporting and internal controls over that. So in the research and development cluster, many of the expenditures are related to time spent by the PI in that grant and on that research project. So making sure that both the time is being reported on those effort certifications as well as the pay rate being supported, and ensuring that you're using information from HR and payroll in order to ensure that those documents are being supported. Another item we've been seeing pop up a little bit more is related to subrecipient monitoring. So that is when your institution is receiving the federal awards and passing that through to another institution. So it's on your responsibility to make sure that you ensure whether you're passing the funds through to a subrecipient or if there is a contractor. So I just wanted to cover briefly the difference between what is a subrecipient versus a contractor, because we've been getting a couple of questions related to that. So a sub-award related to carrying out the federal awards is an entity who determines that their own eligibility. They have a performance measurement related to the objectives of whether the program was met. They have responsibility for decision-making, and they're responsible to adhere to federal program requirements specified in the award. And they also implement a program for a public purpose. So they're ensuring that the services and benefits are received from the pass-through entity. On contrary, a contract is for the purpose of obtaining a good or service for the recipient or subrecipient's use, which creates a procurement relationship. So that kind of differentiates. They're more of a good or service within their normal course of business. They provide similar goods and services to many different purchasers and operate in a competitive environment. So there's importance when you're looking at your federal awards to ensure compliance with the subrecipient monitoring if needed.
Yeah, Kelsey, I was going to add, I can interject there too with subrecipient monitoring. If, again, you just made a really good point. If it's on, obviously not student financial aid, but another grant, federal program, that might be then subject to the other requirements of ensuring no debarment or suspension of whoever that contractor might be. So keep in mind that if you do have more of that vendor relationship or subcontractor relationship, keep in mind that then there's additional requirements that you might be subject to as part being that pass-through entity and your responsibility.
Exactly. And it's important to make sure when you're entering into a subrecipient arrangement that you're ensuring that you're identifying the subrecipient, performing your risk assessment, ensuring that there's a written agreement between your institution and the subrecipient, as well as performing some ongoing monitoring activities, reviewing their financial performance, verifying allowable costs, ensuring all of the goals are being met, and then following up on those, reviewing their audit reports, documenting any findings, and ensuring corrective actions are being implemented at your subrecipient. And again, as auditors, we always want to make sure that there's documentation and record keeping of you performing those actions. So as we'll discuss a little bit later when it comes to the control side of things, it's really important to make sure that you're documenting everything that you're doing. So this slide here is taking us through the top 10 program review findings at the federal level. So this comes right from the Department of Education. We have here the 2023 deficiencies. So this is a little bit old at this point. However, the 2024 has not been released. Not sure when we can expect to see that, knowing, what's going on at the Department of Education currently. But I thought it was helpful to kind of see here what's going on from not just what we're seeing in our service area, but across the nation. So as I mentioned before, what we're seeing, that student status and inaccurate or untimely reporting is the #1 finding on these program reviews. Going down the list, return of Title IV calculations, student credit balance deficiencies, inaccurate record keeping, etc. On the next slide here, we'll look at the top 10 audit findings. So this first slide was program review findings, and this one here is the top 10 audit findings. So there's a couple of items I wanted to just talk through related to these findings. So the student status and inaccurate or late reporting. There's a variety of findings that kind of fall under this category. Inaccurate reporting of student enrollment status changes, failure to report the last date of attendance, inaccurate reporting of program level data, late reporting of student information, and late submission of NSLDS enrollment roster file. So everything in this, there's kind of a couple of pieces, but in general, unless the student has other circumstances, you're required to report student enrollment changes within 60 days. So ensuring that you're working not only in the business office, but also with registrar, with your deans to ensure that you understand when a student drops below the half-time threshold, that you're able to report those students on a timely basis.
And I think, Kelsey, this is a perfect example where we have seen this internally here at Bonadeo, is where there's been that turnover or that position not filled. Is there was like one individual or one main person that would get that enrollment roster file. And once that person was either out on leave or no longer with the institution, that kind of got dropped by the wayside, or nobody really knew what needed to happen with that file. So as Kelsey mentioned, there's 60 days. It needs to be reported. It includes, again, as she mentioned, not just students that have withdrawn but graduated, or even changing that enrollment status, whether they go up or down or an increase. So if they go from 3/4 to full-time, or maybe even half down to a quarter. So all of that needs to be updated, as Kelsey mentioned, every 60 days. And it's specifically a requirement in the compliance supplement that we, as I'm sure you know, if you are a Bonadeo client, we do look at and dig into specifically inquiring of how often you are doing those reporting and making sure that students are getting updated accurately. So that's one, to make sure that multiple people are receiving those emails from the department, so that in the case of turnover or an absence, somebody else is able to pick that up and get that done timely.
Yeah, and really the other piece is, why is this important? Why do we care? And the information that's reported here is really important to the students. So it gives the department information on whether the student's in school, if they have to move into repayment status, or if they have any sort of deferment. So it really affects their grace periods and when they have to actually start repaying any of those loans. So that timing of that reporting is really important for each of your students. So the next finding is repeat findings, and we'll cover this a little bit later, but it's really important to make sure that you're doing everything that you can to ensure there are no repeat findings. So if you do have a finding in any given year, ensuring that you're following up on that corrective action. A repeat finding is an indicator of increased risk to the department, to your students, to your auditors, and it can show that the administration isn't necessarily taking the corrective actions that are needed, whether that's the corrective action being taken and not being implemented, or if that corrective action was never actually able to be implemented. There's many factors that can kind of address that. However, we'll talk through it a little bit later, but I wanted to make sure everyone understands that that is another finding. It's a separate finding if you have repeat findings. The next finding is related to the return of Title IV or R2T4 calculations. So that can be anything from they weren't using the correct calendar, incorrect credits, all sorts of things that can affect that item. Incorrect number of days, withdraw date, any sort of mathematical errors, etc. The next is return of the Title IV funds made late. So the institution must return its share of the unearned portion of funds as soon as possible, but no later than 45 days after the determination that the student withdrew. So similar to what we were talking about with the enrollment and those change in statuses, this is required to be returned no more than 45 days after the student withdrew. So ensuring that the business office, registrar, and everyone else involved in the process understands what these requirements are and are able to work together to ensure timely refunds there. The next item is related to student credit balance deficiencies. So when an institution disperses Title IV funds by crediting a student's account If the amount credited exceeds the tuition and fees, it must repay the resulting credit balance as soon as possible, but no later than 14 days after the balance has occurred. So ensuring that students, they're not only taking the funds, taking any sort of loans or aid to pay for their tuition, but they're also using it to pay for room and board, meals, and the department really wants to make sure that these students are getting the funds that they need in order to live and continue their education.
And you can get an agreement with the student to hold a credit balance, but it needs to be very specific as to why you aren't paying out the student the funds. So it's an acceptable process. I have seen it a few times over the years where a student might have a very specific circumstance where they want the school to hold the funds, whether it's, for an apartment, for rent, or a later purchase of books or whatever. But you can hold funds for students, but you need to have a formal written agreement with the student between the school to hold those funds. So obviously, the preferred method would be to just pay them out, but that is just another option that you could have is that formal written agreement.
Thanks. That's a great addition there. The last item here, we've kind of talked about that inaccurate disbursement dates or amounts reported to COD. So that could be anything from failure to submit the disbursement records, disbursement dates not matching between the student's ledger and the dates reported to COD, the amounts not matching. So accurate and timely COD reporting is really critical to the department's administration of Title IV programs. So incorrect reporting on there, again, could harm the students that you are serving. And with that, we will open it up for polling question number 1. So how often are federal aid packages reviewed for over or under awards at your institution? A, before the disbursement only. B, monthly. C, at the end of each academic year. Or D, not consistently reviewed.
All over the place on this one, Kelsey. Oh no, you lost the presentation.
Yep, it looks like someone tried to take control. So let me see how we get this back.
Well, you do that. So when we're looking at the responses here, it looks like most of the responses are monthly reviewing for over and under awards. 20% are only doing it at the end of each academic year. So that might be getting a little late because you're kind of impacting a student's ability to draw funds. Let's see, and then we got some don't consistently review. So that, as we know, is one of the biggest findings we have. And then the last one is, I think it's before disbursement. So that's 15%. So it looks like most of you are doing it monthly, which makes sense. You're doing it when you're performing those monthly reconciliations of your draws and student packages. So that's probably the preferred method is monthly, making sure that you're looking at students' enrollment, as Kelsey keeps touching on, and making sure that the draw that the institution is taking is reasonable. You yourselves, as the institution, aren't overdrawing funds as well. So monthly is probably the best operational answer, as that also meets the cash management requirement, as it is your responsibility to ensure the draws that you're taking are satisfying specifically the amount of the awards going to your students. So 49% of you, so fantastic. And others, maybe some opportunities for something different before disbursements also make sense. So that's also a good one. I think A or B are probably in this case the best answer that we would want to see.
And Duran, can you just mention, I'm not sure how I keep losing the screen when we're going through the polling questions.
Yes, absolutely.
Thank
Just
you.
as a heads up, when you're accessing that conference video panel, you may see a share button at the bottom. You'll want to avoid that and scroll and hit submit versus share.
Thanks, Duran.
Of course.
Unless you all want to do the presentation, then, please take over. That's fantastic. So one of the things we were just talking about is what are we looking for? And so here we're going to kind of get into the next 2 slides, talk about what are we looking for? What are we always asking for? Any of your auditors, we dig in, we ask a lot of questions, but it's really the big thing is proper documentation of controls. So there's all these compliance requirements and, most of you are obviously very aware of what those are, but the big question is, in our audit report, we're required to take into consideration your internal controls. And that is a whole segment in your report is our opinion on your ability for having those internal controls over compliance. So we do ask a lot of questions about proper documentation of controls. And I apologize, I am getting blinded by the sun. If you do see me, I can't complain about it. But and making sure, though, that, is there segregation of duties? Kelsey's touched a lot on the various offices, talking to registrars, talking to enrollment and financial aid, and just making sure that there's the proper segregation of duties and that everybody's kind of working together. We do sometimes see that these positions are siloed and there might not be a great cross communication of what's happening. And there might be great controls in place, but they're not really well documented or nobody's quite sure what that other department or office is doing. So just making sure that those controls are properly documented. And they always say, if it's not documented, then we can't support that you're actually doing it. So if somebody is reviewing those monthly reconciliations, if somebody is a secondary person approving that monthly draw to support student accounts, there should be some sort of documentation of that process occurring so that we can ensure we see that there's that review or oversight and that there's not just one person solely responsible for that process. So that's that second part is evidence of that monitoring and review and just making sure if you say, the director is the one reviewing the final packages, can we see that whether it's in your system or, is there some formal communication or sign off or monthly reconciliation report that we would be able to actually see the evidence supporting that review. And then we're going to talk about this a little bit later in the presentation, getting into specifically the review and compilation of your CFA, which is your schedule of federal expenditures. That is your responsibility as the institutions to put that together and provide it to us. And I will say we've seen, I don't know that we've brought it up to the level necessarily of a finding, but this past year was some challenges with institutions and understanding how the actual CFA was compiled and what awards were actually supposed to be included, whether they were federal or not. So this is something that does take time, and we want to make sure that institutions understand. Many of you on the call are probably in the financial aid office. But chances are your institution receives several other federal grants, and making sure that you're working probably with your business office or finance to make sure that that is getting compiled correctly and that all awards are being included accurately and completely. And then I'll just add here, and then I'll turn it back over to Kelsey as we go into, internal control. So as we've talked about coordination, making sure that you all are coordinating internally with each other. We do talk outside of just the financial aid office, and I always like to make comments about how financial aid, specifically compliance, is not a financial aid office responsibility. It definitely is a cross-campus responsibility for the entire school. Your president is the one, sometimes the only person getting communication. So making sure that the president understands who to filter those communications down to, and or having those regular conversations to make sure that anything that has a timely response is getting addressed at the right level and by the right person. So Student accounts, when are those accounts being credited? Is the business office aware of when they need to draw those funds? And is there communication of enrollment? So again, that goes into maybe the registrar's office of what are students enrolled in, and does their package need to be changed? Or to financial aid, was there an outside award that was received late and now the student's package maybe needs to be adjusted somehow? So as you can see, a lot of communication might be coming into various offices. So everybody needs to be working together to ensure that these packages are accurate and complete, and that there's controls over communication especially. Kelsey talked about research and development. There's not a lot that goes into it, but at the same time, the main part is your payroll. So as Kelsey mentioned, those PIs are assigned to those research and development grants. If you were to get another grant, did that impact the amount of time that they were really initially awarded on a previous grant? And does it need to be communicated to the funder for formal changes so that it's still allowable and permitted for that PI to be separating their time across various grants? And then even the researchers working under that PI, many grants sometimes fund one research project. So ensuring that you can support the time and effort of all the individuals working on those various projects to ensure proper reimbursement for whatever that program or project is that you're working on. And then subrecipient risk assessment and monitoring. So Kelsey also touched on this, the risk assessment. So at the very beginning, when you are possibly searching out for a subrecipient to help you facilitate a grant, this is typically outside of financial aid. This would be another grant that your organization, institution have received. You should do some sort of a risk assessment and have that documented, of just like you would a procurement process. Why are you choosing this specific institution or organization? Why are they the best ones to help facilitate this grant with you? Or why are they the ones that you've ultimately selected? Did you go out and seek other ones, or did you just know that this specific organization was going to be the best one, and why? And then monitoring how they are fulfilling the grant requirements. As Kelsey mentioned, they too are responsible for fulfilling and actually acting as if they specifically directly received the grant. So how are they documenting eligibility, or how are they fulfilling the reporting requirements and tracking their compliance and reporting that back to you? So all of these things do come back to the college and are things that are part of an annual audit that we do ask about, and making sure that, again, there's internal controls responsible for that, because many of these things do not fall just within, say, financial aid or the business office. They go across the board, and they could be on a completely different campus. So you want to make sure that you have those controls in place for that communication and documentation of how these processes and procedures are being followed and implemented.
Exactly. The biggest risks often involve multiple departments. That's where those breakdowns and internal controls can exist. So really ensuring that you're coordinating between all of the different players on campus to ensure that they not only understand their roles and responsibilities, but have the tools that they need in order to actually do the things that they need to do. So next, we're going to walk through just a couple of findings. These are some examples of different findings that we've been seeing, and just kind of what that means. So this scenario here is that a student was withdrawn. However, the status was not updated until in COD until 90 days after the withdrawal. So here, making sure that the registrar is aware of changes, and that whoever is actually reporting the students to COD understands and are able to act on those changes quickly. So here you can consider any sort of automated flag or reporting, a flag of student enrollment changes that can get sent out to multiple different people. As Kieran mentioned, if the truth lives with one person, there's definitely a risk that they might miss something. So having a few different people, but understanding each one's responsibility so that they can ensure compliance. There's a lot of items in technology that we're able to utilize now that can really help some of these triggers as well. The next example here is related to the research and development, some of those effort and reporting. So the faculty payroll charged to the award, however, they didn't have a certified effort report, whether that was the time that they spent or the amount of their salaries. So documentation, as we've mentioned, is everything. Even if they actually expended and put that effort in, it must be tracked and certified. So ensure that you're involving HR, payroll, and the PI, as well as any of the researchers under those awards early to ensure compliance. With that, we are going to take it to polling question number 2. Who at your institution is responsible for preparing and reviewing the CIFA? A, only the controller. B, share between finance and grants. C, external auditors. Or D, not sure who prepares it.
And make sure you click submit. Do not click the purple share button at the bottom, because otherwise that'll turn us off. So just a reminder for everybody. So with that, we'll actually go ahead and we'll turn on the poll. Will remain open, but we're going to go ahead in the essence of time onto the next slide. With reconciling the CIFA. Now, this doesn't honestly, I think, impact as many of the institutions on the call here that are June 30th, as that date coincides with the department year end. This impacts, honestly, more we see this on the community colleges, where your year end is August 31st and the department year end is June 30th. And looking at your summer funding, whether that's a header or a footer. So that is where specifically we have seen, even just with student financial aid reporting, is making sure there's some formal documentation that can be provided to your auditors to explain what funding year is going into the CIFA for reporting at the end of your calendar year. So many institutions sometimes will have the prior funding year paid for the summer, and then that still gets reported in the following year. So depending on the funding year and when you use that to do your header or footer for summer, there's kind of a crossover period there that needs to be accounted for and formal reconciliation. And then, as we've talked about, there's always other grants. So this would apply to probably anybody on the call, regardless of your year end, is making sure that the business office understands and ensures which grants are ultimately federal. So keeping in mind that there are grants that get passed through various counties, the state, or even potentially, the National Science Foundation for research and development. All of those things need to be looked at and considered to ensure that you are providing your auditor an accurate and complete CIFA, as well as confirming your assistance listing. So the CFDA reference is technically gone. It's now considered an ALN, assistance listing number. But making sure that those grant documents are reviewed and that you're providing your auditors with that correct number, as well as any requirements of pass-through details. So pass-through details are, as I mentioned, who the funding grant actually came through to the institution, along with what that separate grant identifier number or ID comes from. So I know, for example, the state typically has either like a CC or a GG account number on their grants. So making sure that you can also provide those to your auditor as they are required in your financial reporting that does go out to all of the various funders. So again, Kelsey has a great comment here at the end: start early, don't wait for audit season. So this is something that should probably be looked at throughout the year and not just at the very end of the year when you get, that request list from your auditor and say, oh, we should probably start putting that together. It can take time and effort, and again, reaching out to various departments to ensure that you're getting the right information and that you're capturing all of the federal awards applicable for your institution.
Yeah, and I actually put together a little checklist that we can send out with the materials, and it kind of walks you through a couple of different categories of your reconciliation process. So the data collection, so as Karen mentioned, identifying all of your awards, verifying everything's recorded in the general ledger, reviewing for pass-throughs, and confirming your ALNs. And then booking those accrual adjustments. So any of your accrued payables or encumbrances at the end of the year are included. Any unearned revenue or advances not being included in your CFA, adjust for any prior year activity or changes, and then verifying those indirect costs are posted appropriately. Then looking at compliance and completeness, ensuring that it includes all of your federal expenditures, confirming, looking at last year. So a big piece is kind of compare and see what was our CFA last year, where is it at currently, and kind of just taking that high level look to see, are there any changes outside of what we would have expected to see? And then reviewing and approving, whether that's with financial aid, the business office, grants management, or any program staff for accuracy on their end as well. And then ensure that you're maintaining your documentation and all of your work papers to ensure that you can provide those for your auditors. Will help both with internal, keeping your processes, policies and procedures documented, as well as for us auditors. It will be much less of a heavy lift when it comes time for audit. So we've talked a little bit about what are the common findings that we're seeing. So I next wanted to talk through what is a corrective action plan and what are some of the elements that are required to be in your corrective action plan. So making sure that you're being specific, tying the actions to responsible staff, and really defining how and when you're going to follow up. So those are some specific items that are required to be in there, and we'll walk through a couple of corrective action plan examples. Before that, we're going to talk about some common pitfalls. So we often see corrective action plans that are written just quickly and not really understanding what the requirements are. So we'll be able to, hopefully now you'll be able to provide audit ready corrective action plans. Hopefully no one has corrective action plans. I was going to
say, hopefully they don't need to do them. Yes.
But if you do, you'll feel much more prepared. So an example corrective action plan, so you're required to give the corrective action plan a reference number, relate to the federal program that it relates to, as well as the award year. So this is just a little example of that. Next, you're not required to go in this, fashion. We use this on our summary of findings. However, I think it's nice to be able to pull that information from the summary of findings to your corrective action plan. So this specifically talks about a student who was over or under awarded for their Pell due to a miscalculation. And what happened was a staff misapplied the EFC, which is now the SAI Pell chart, and didn't review their eligibility before finalizing the award. And here it's mentioning that the student under awarded one student by $450, which has been corrected and dispersed. Important to know, as much detail you can put here that you've actually corrected the error and that you've made sure that the students were made whole, as well as notifying if there's any systematic issues in that related to that finding. Here brings you to the actual corrective action. So this is what the institution is going to do in order to make sure that this finding is not repeated. So they implemented some automated validation to flag any mismatches between the Pell eligibility chart and what the student was awarded. Do some additional training for financial aid staff, a secondary review of any Pell disbursement changes, as well as an internal audit sampling 10% of Pell awards. It also lists out here who the responsible party is, as well as the timeline that they will use to implement this corrective action plan. So for us as auditors, we're required to follow up on any prior year findings. It's important not only for us, but for you to ensure that you are both in compliance with the financial aid program, as well as ensuring that you have what you need in order to be ready for the next year and that your students are receiving proper awards. So it's important to make sure that you're reviewing any prior findings before the audit begins. So open up your audit report from last year and check and see if you had any findings. Ensure that those corrective actions have actually been implemented and documented. So making sure that you're actually following along with your corrective action plan, provide any updates or changes that have been made to the corrective action plan, and communicate openly about challenges. If you weren't able to do this item that was in your corrective plan, being upfront in that communication with your auditors, we can really help you find different ways to get through the corrective action and ensure compliance going forward. So open, honest communication can reduce the risk of any of those repeat findings so that you're not stuck in that boat. Here is an example of a summary of prior findings. So you are required to update the department on any prior findings. So hopefully you can say that the finding was not repeated. However, if there is a repeat finding, this kind of walks you through some ways that you can document that. So last year's corrective action plan included training, but didn't include any system automation or sustained monitoring. We have an updated plan that includes these preventative controls related to the dual review and system automation to ensure accountability. So again, as you're making these corrective action plans, hopefully you feel a little bit more comfortable when it comes to the documentation here. With that, we will take us to polling question number 3. Does your institution conduct internal reviews related to federal awards? Yes, annually. Yes, but not consistently. No, we rely on external audits, or not sure.
Oh dear. Very split between not sure and yes, but not consistently. Oh, some are yes annually. It's changing. Yay. So yeah, I would say making sure that, again, as part of the annual audit process, somebody is taking responsibility for those prior audit findings and making sure that you can appropriately, as Kelsey mentioned, respond to your auditor and provide the update, whether it is going to be, yep, you're most likely going to find this finding again because we weren't able to put in all the processes that we wanted, or well, it took a little bit longer, but we feel like by our spring semester, we really had things in place. So hopefully you see that too. So just making sure, I think Kelsey was a really good point. Like honesty, again, as we all grew up knowing, honesty is the best policy, and just being completely transparent to your auditor of, hey, here's what's going on, or here's what you might see, will really go a long way. And then, as Kelsey also mentioned, we can assist, at least, you know, if we were your auditors, we try to assist you in making sure, you know, was there another mitigating control in place, or what's something simple and easy and quick that you can put in place now and then work on a more robust plan going forward. So again, you know, we try not to have those repeat findings. We want to make sure that we're able to assist throughout the year. And if you are having a trouble getting something put into place, or you want to touch base earlier than your audit cycle, obviously, please reach out and always, you know, run things by us and say, you know, would this work? You know, I had a college just the other day reach out. They are having a turnover in a key position. And so they said, you know, this is an opportunity to do some real serious analysis of internal controls and maybe how can we restructure things? And so we've been kind of having a back and forth dialogue of, okay, will this work? How would I do this? Is this going to meet the requirements? And so we're always open to try to be able to help you before you have to actually react to potentially some impact in your controls that aren't being properly addressed. So with that, it looks like most of you are doing this annually, which is awesome. The few of you who aren't sure or rely on us as your external audits, that is, you know, as you should all know, that audits are the least, one of the least ways to find or identify potentially fraud or other risks in your internal controls. It's really your own internal controls that are the best in any of those other communications. So I would say relying on your auditors is not really a good way to do it. Plus, then it ends up potentially generating just more findings. So, which you don't want. We don't want you to have those. So, if you're in that boat, I would highly encourage you to reevaluate and maybe assign some individuals a process to make sure that you are actually looking at those reviews, those prior findings, and making sure that you have those controls in place. And that being said, the next slide is talking about those repeat findings. Obviously, you know, we added here that this is serious. You don't want repeat findings. You don't want to raise any red flags. This can be indicative of questionable related to even your financial responsibility, that fiscal responsibility. It's not just looking at the calculation of that composite score. There's a lot of other factors that go into the department's analysis of a school's responsibility. So again, it does raise red flags. It kind of brings a little bit more attention to your institution. And again, it could be indicative of poor internal controls, lack of communication, the fact that you can't implement a corrective action to correct the issue and it's just continuing to be systemic across the institution. And then again, it does potentially affect future funding. A funder, you apply for a grant and they see that you've had 2 years of questionable findings related to the reporting of another grant. That new funder might say, well, this is really important to us and we don't really think that you would be a good fit for these monies to go ahead and fulfill those program requirements. So it's really something that we want to make sure that institutions are taking serious and understand what needs to go into addressing those findings so that, as Kelsey said, we can actually say it was addressed and not have a repeat finding, and you can all move on and, move on to the next challenge that you have. You have plenty of other things to deal with. We want to make sure that we can get these addressed in the next audit cycle and not have to repeat them. So with that, I'll turn it over to Kelsey for 5 things to start doing as we go into your 2025 audit cycle.
So here's kind of your action plan. These are some steps that you can take now to make sure that you're set up for a smoother audit cycle. We've kind of mentioned these briefly, but here's something if you want to, take some notes down, here's where you can do that. So review any of your prior audit findings and corrective action plans. Ensure that you've made those corrective actions, or if not, reach out in advance to your auditors. Perform a mini internal control self-assessment. So look at what are new risks, what has changed across the industry or at our institution that might affect our internal controls, really understanding not just what we've always done, but is there a way that we can do something a little bit differently that will make a bigger impact. Reconciling and pre-auditing, as I like to call it, the CIPA. So that's what we mentioned, where you're kind of looking at all of your awards, comparing it year over year, seeing if there's any unexpected fluctuations in your expenditures. Making sure that you're synced up with different departments across campus, ensuring that everyone's communicating and understands not only what their responsibilities are for the audit, but across the industry. And then updating and documenting your policies. So not just relying on what you've always done, but really taking a look. Maybe pick one policy or procedure to analyze each year and making sure that you understand what it is that you're doing at the institution and if there's a way that you can improve that going forward. So some final tips. Don't wait till the year end to start preparing. A clean audit doesn't really start during audit season. It starts now. So applying these tips across your institution will really help all of your staff to ensure compliance. So training different departments on their roles and responsibilities. And as auditors, document everything. If you did it, make sure that you're documenting it. So we have our last polling question for this portion of the session. How does your institution track and implement changes to federal compliance requirements? A, ad hoc awareness through staff. B, monthly compliance meetings and updates. C, annual review, policy review. Or D, we rely on our auditors for updates.
You can rely on us, but and so we'll wrap up here with just we were really hoping the 2025 compliance supplement would be out. It is not. It is getting very frustrating. So we were hoping to provide updates if there were any significant changes to those compliance requirements, specifically for those of you with June 30th and beyond year end. So any of you who have June 30th and my community college friends, the new compliance supplement will apply to your audit. So unfortunately, I don't have updates. I have been checking all weekend and they are not available. So big news, though, again, probably will never really impact our community, our college friends, because they receive well more than $1 million in federal awards. But the threshold is increasing. It is going from 750,000 up to $1 million. And then the FSA requires school expending less than the threshold, which again, I'm not quite sure that we have anybody on the call, but if you were on the call, you would have only 6 months to do your easy audit reporting. Otherwise, it is still the standard 9 months. And it also does increase, though, which will impact potentially some of the opportunity for what programs and grants besides financial aid or research and development were to get audited. So please keep in mind when, again, as Kelsey was saying, this is a great reason to next year look at your look at the CFA, your schedule of expenditures, and see what grants are now actually over $1 million in expenditures. So again, this is applicable for next year for 2026 year ends. But again, that $1 million threshold does also apply to the type A programs. So those that we would look at as auditors to determine which programs to audit. And then for schools with 34 million or less in federal funds, those would be considered under a type A, and you may be subject to audit more often than the smaller programs. So it's hopefully going to kind of shift out some of those really small programs that sometimes rise up to the threshold. Hopefully it'll start to push those down, and it'll actually be less cumbersome of an audit process than it has been in the past. And then Kelsey, I'll let you go ahead and wrap us up.
Yep, so the other changes were changes to the indirect cost rate. So that increased from 10 to 15% as the maximum rate that you can receive. Obviously, you can do an alternative rate with the agency. However, the 15% will be the new de minimis indirect cost rate. And there's also increases for the amount of subawards that recipients can apply their indirect rate to. Increase from 25,000 to 50,000. Again, this is all for next fiscal year. There were also some changes to the verification process. During COVID, there were a lot of changes, and they really scaled back the verification the last few years. But this is a new verification tracking group that I thought might be helpful for our higher education clients to kind of see what information we might be requesting when it comes time for audit related to verification, because it definitely was scaled back the last few years. With that, I'm not sure if there's any questions for us.
It doesn't look like it.
All right, with that, we will pass it over to Paul.
Great. Thanks very much, Karen and Kelsey. All right. Good morning, everyone. Thanks for joining. I'm going to advance my slide. Let's see how this works. Perfect. Look at that. So we're going to be talking about shifting gears kind of entirely from audit. We're going to be talking about data breaches generally and how financial professionals and others at institutions can prepare for security incidents and really know more about the process. And, you know, some of this may be new, some or maybe all of it may be new for the participants on this call. Some may seem strange and from another planet. That's okay. The most important step in relation to incident response preparedness is knowing what's out there. And you may see some common themes around planning, documentation, risk assessment that really resonate in your financial and audit function currently. Unfortunately, I've got a lot to say. I love talking about this stuff. I love getting institutions prepared for and aware of the risks that are out there. I will hopefully get through all the slides, and if not, I can make them available. My contact information is at the very end. So with that said, let's jump right in. What are we going to talk about today? I've got a little agenda for us. We're going to talk about the incident response process generally. And, you know, going back to my first slide, we're calling this data breaches behind the scenes. We're going to show you generally what kinds of things arise in the incident response process and how to plan for them. And, I'm calling them an incident for a very important reason. A data breach, the word breach, is a legal term of art. It's a defined term under all 50 data breach reporting states in the 50 states here in the US. It's very important to think of an incident as an incident before or unless and until outside counsel declares a breach. If you start talking about a breach internally, if you have from the finance or audit function or from the security function, someone calling an incident a breach, it's very hard to kind of walk that back. It's very hard not to trigger reporting duties that may not be otherwise triggered. So be careful of your terminology, and we'll be using the term incident, at least through most of the presentation today, to talk about these scenarios. I said we're going to be looking behind the scenes. We're going to look at a few specific case studies. These are real life case studies. The names have been changed to protect my clients. But we're going to let you know kind of some good and bad stories of successes and otherwise in the incident response process. And then just like Karen and Kelsey, we're going to end up with a top 5 list of recommendations going forward for your institutions. So with that being said, let's jump right in with a polling question. So if we can have the poll loaded here, I'll read the question. How involved are you in your institution's cyber incident response process? A, not at all. B, somewhat. C, very. Or D, I'm in charge of the process. So when you submit your answer, please click on submit, not share. Got a bunch of somewhats. Got a bunch of not at alls. Not at all seem to be carrying the day at about 60%. One person's in charge of the process. Interesting. Okay. Alrighty. So this gives me a good idea of where you are. And the important thing I'll say here is you all have a role. Even if you're not involved in the incident response process, you all have a role today. Even if it's only reporting an incident, your institution should have a policy in place that requires folks to say something if they see something. And you should also consider the disciplinary process. Quite often, reported incidents or incidents arise from a user's own behavior. You want that user to raise his or her hand to let the powers that be know that something's going on. Think about something like amnesty internally. Think about how you've documented how to handle self-reporting of incidents, because that self-reporting can be absolutely key. Okay, so with that as background, I want to talk generally about the incident response process. And if you ever studied this in a textbook, this is how you would learn about the process. I've got some numbers and letters up there, 861 Rev 2, Revision 2. That's reference to a federal document on incident response. It's a special publication from the National Institute of Standards and Technologies, NIST. And they create a number of different frameworks on the security in the security realm that help organizations kind of organize their approach. And they've got a framework for the incident response process. And here it is. It's got 5 primary steps to it. The first step is preparation. Preparation is key. Making sure that you've got all your ducks in a row, making sure you know the relevant people and processes to bring to bear in relation to a security incident. That's really, if it's not half the battle, it's a large portion of the battle. And rightfully so, NIST starts with a preparation step. And then we've got the bang. We've got the bad thing that happens. We've got the incident that's discovered, and it brings to the institution to the next step, which is detection and analysis. Detection is key. Quite often, there's a huge latency period in relation to incidents, a period in which the institution has not yet discovered what's going on. And when they do discover, there's often a fog of war, a time period in which the institution's trying to figure out the scope. Now, this publication is drafted with a very technical bent to it, but these 5 steps that we're going to go through really have a great application in the non-technical space. Analysis just doesn't mean analyzing the malware and technically understanding what it does. It means understanding the people who are involved, understanding the data that's involved, understanding the systems and operations that are involved. If the systems that are crucial to your audit or financial function are down, that's something you need to know right away in the analysis phase. So after detection and analysis, we get to containment and eradication, stopping the bleeding, stopping the fire, stopping the bad guy, hopefully in his or her, its tracks. Quite often this is done by tools. Sometimes it's done by disconnecting the internet or disconnecting affected systems from other systems. But containing is key because quite often you'll detect something at an early stage, and if you've got your containment processes in order, you'll be able to stop it from going further. Oh, I'm going backwards. So containment and eradication, and that brings us to the recovery phase. The recovery phase can't be done without the analysis phase. Without knowing the full scope of an incident, you don't know what systems to recover or what to recover from. And the good news in both the containment and eradication and recovery phase, and maybe even the detection and analysis phase, usually by this time, as we'll see in the next slide, you've got professionals involved. You've got outside experts involved who are helping you do all this. It's important to know these steps internally, but many institutions are not going to have the wherewithal, the expertise internally to do all of these things on their own. So incident response is certainly a team sport, and we'll see some of the players in that sport a little later on. So after the recovery phase, we've got the lessons learned phase. That's when you look back at an incident and figure out what went well, what didn't go well, and how do we avoid an incident like this in the future. So it's a cyclical function that lessons learned phase plays into the preparation, and hopefully is going to inform you as the cycle continues. So that's really the textbook approach. Let's talk about how things happen in real life, and specifically from a bad guy's point of view. So first and foremost, you've got latency. Quite often this can last days, weeks, months, over a year when the bad guy is in your system, doing reconnaissance, figuring out who you are. Quite often they don't know who you are. That phishing email that your user has responded to may not even be directed at your organization. For example, something about unpaid tolls or something about a delivery going to your, apparently to your home address. Those kinds of things are quite often a scattershot approach, and they don't really know they've got a university or college on the line until they've done their reconnaissance. And that all happens in the latency phase. And then once they know enough about you, they'll do the bad thing. They will detonate their malware, they'll steal the data, they'll do something to affect your systems, and all heck breaks loose at your organization. You know, I've got a little fire icon because it really is like your hair being on fire. People are running around trying to figure out what's going on. They're in that analysis phase, trying to figure out scope. Is this just a technical outage? We all have them. Or is this an attack? Who knows? And there's often a lot of confusion. And bad guys take advantage of that confusion. They get more time because resolving that confusion takes time. What does the victim do at that point? The victim calls the fire department if there's a fire going on. Now, that's things like external data breach counsel. That's something like a DFIR vendor, data forensics and incident response. And so the bad guys knows that now there's somebody on the other side. There's somebody fighting that fire, and they're going to take steps to stay in your system, to thwart the efforts of the good guys who have now come in. They now have an adversary that they're fighting against. Oh, I'm going backwards again. And then the organization starts to recover. If the organization has contained and eradicated the threat, that's when they start to recover. But recovery also takes time. And here I've got a little dollar flying into the picture. Right about now is when the money happens for the bad guy. If recovery is imperfect, or if recovery can't get back everything that the institution needs to get back, that's when ransoms are paid. That's when the bad guy is able to increase leverage to really make money out of this process. And that is the whole goal. And what does money do? Money gives them more power to attack more people and create more latency and go through the cycle again. So that's how things look from the attacker's point of view. Let's talk a little bit more about the people involved. So first and foremost, I want to talk about the people involved during the preparation step. Preparation is absolutely key. And for those who have not been involved, probably the most important thing your institution can do is engage in an incident response tabletop exercise, running through a simulated incident and figuring out who's going to respond, how and when. Absolutely key to protecting your organization. It's also a heck of a lot of fun. Going through these scenarios on the without them being real, going through these scenarios with the team is a great team building exercise and builds muscle memory at your institution to allow you to respond appropriately. Thinking about blind spots and missed opportunities this is a great opportunity to do that. Thinking about external counsel and the DFIR, data forensics and incident response vendor that you're going to get. Thinking about if they're approved by insurance. Setting realistic expectations in relation to insurance. Insurance is important. We're going to talk more about what role it plays, but it's not everything. It's just a risk mitigation device, a risk shifting device in the first instance. It'll pay for some of your costs, but not all of them, and it won't solve all of your problems. And figuring out how to take the things that you learn from a tabletop and put them back into that cycle of preparation and going through the whole cycle again is also very key. And a great exercise in being ready to engage in a lessons learned activity after an actual incident occurs. So if your organization has not engaged in the incident response tabletop, 1, it's likely required by law. 2, it's a heck of a lot of fun and very valuable. And 3, something that maybe you should be asking in the audit function, especially if you have an IT audit function, or in a leadership function. Certainly, financial leadership should be involved in incident response exercises, because in the end, someone's going to have to pay for all of this, even under your retention with insurance. So finance absolutely needs to be involved in this process. So that's the front end. That's the first step in the process. Let's talk about the last step, the lessons learned step. Many organizations do not take advantage of the benefits that can be gained from a lessons learned step. They get an incident, they put it behind them, even a small or especially a small incident, and they don't take time to learn their lesson. And we heard from Karen and Kelsey how one of the worst things to have in relation to an audit is a repeat finding. Same thing in relation to incident response. If you're falling for the same incident, the same problem again and again, if you have the same risk that you can't mitigate and can't get rid of, or at least lessen, that's a very big problem, especially when regulators come into the fold and start asking, well, how many email compromises have you had? And if you had this kind of issue before, for example. So think about every real life incident, especially small incidents, as a learning opportunity. Think about risks that you haven't identified before, single points of failure, identifying where you dodge a bullet and knowing that the next time you may not dodge that bullet. Very, very key. So if an incident response tabletop is fun, a lesson learned step can be eye-opening and really empowering to think about, oh, well, something went wrong, but gosh, let's get together, roll up our sleeves and fix it in the first instance. Okay, so moving on to our second polling question. How familiar are you with the third parties your institution would use in the case of a cyber incident? A, not at all, B, somewhat, C, very, or D, I'm responsible for those relationships. Okay. Bunch of not at all. We've got some somewhats, people who are generally familiar with the players involved. Oh, 2 people voted for I'm responsible. I was one of those votes. And a couple very. Interesting. Great, we'll let that populate a bit more in the somewhat arena. All right, let's talk about those third parties that we use in relation to an incident. And here is a hopefully helpful chart in that regard. So I want to talk about the incident coach in the first instance, and then talk about everybody who plays a role under the coach. So incident coach, that's outside counsel. Your institution should absolutely have dedicated outside counsel that they have talked to in advance, that they have vetted, that they're comfortable with in relation to an incident. Think about it. These incidents can be one of the worst things to happen to an institution. Institutions have closed. Institutions have suffered 7- and 8-figure losses arising from incidents. Using just the 800 number on your insurance policy to get counsel in place, using someone that you've never used before, that doesn't know your institution, that you have not had a chance to vet, is a risky scenario, and we'll talk about that in a moment. But the role that outside counsel plays is really as a coach. We don't do any of the things that have to happen to get the institution back on its feet, but we guide the institution in that regard. We guide traffic. We get the right people, get the right players on the field to kind of continue the sports metaphor, and call the relevant plays. Tell them what to do when in their various areas of expertise. So the incident coach kind of stands on the top and represents the organization, which I've got to the side there. The organization has a few direct relationships. That's that lateral line going left to right there. And that's to a number of service providers, which we'll get to in a moment. Most of those service providers come at the tail end of an incident. Things like mailing out data breach notification letters, things like getting identity theft protection codes, working with a security services provider, an MSSP, to get better with security, working with a PR firm to deal with the aftermath of an incident. Those are all direct relationships that an organization has. But going down and to the left there, we've got your DFIR vendor, the technical security expert who helps put out the fire and figure out what happened. We've got data mining, which can help determine scope. Quite often when you have a large data set that's been compromised, many organizations don't have good visibility into those data sets. So you need to hire an outside vendor to go and mine that data for potentially reportable, personally identifiable information, among other things. Now, I've got those relationships down under the incident coach because they're covered under the attorney-client privilege. One thing that the incident coach brings with it is the protection of the attorney-client privilege, all communications with the organization, with the DFIR vendor, with data mining, and anyone who's on that downward or in that down bottom area of the chart are covered by the attorney-client privilege. Why is that important? Because of the fog of war that exists around an incident. You'll have many communications. Many will use the B word, that breach word. Many will be just factually wrong as you're investigating the incident. And it's important, just like with any incident for the institution, to protect those communications under the attorney-client privilege and allow for full and frank discussion. So that's the general constellation of the main folks who are involved. The two most important ones are your incident coach and DFIR vendor. Make sure, again, you got those vetted and in place beforehand. There's a bunch of other people that we have to deal with in incident, one being the bad guy. We're going to talk a little bit about how to talk to bad guys. Why would we talk to a bad guy? Well, if they're holding our system for ransom, we may have to talk to them. And we'll talk about situations where it's advantageous to and strategies in that regard. Generally, dealing with the bad guy is something that happens through the incident coach. It can be the DFIR vendor who's talking to the bad guy. It can be a third vendor, a payment vendor. That's talking to the bad guy. Usually I like to have it be the DFIR vendor. The organization, the institution should never be dealing with the bad guy directly, but that happens more frequently than you'd think. When there's a ransomware issue, your system being held for ransom, quite often, security or your IT function will try and negotiate with a bad guy initially. Always a bad move, especially for those who don't do this on a regular basis. So leave that up to the experts when you're dealing with something like ransomware. Law enforcement, when do we bring them in? Well, as early as we can. Why? Law enforcement doesn't necessarily fix things. We'll talk about one scenario where they did, but they can be very, very helpful from an informational perspective, give you insight into the attacker's strategies, give you insight into how and what may happen in the incident. It's also kind of the right thing to do, quite often, at least, and that's important. When you've been attacked, your institution is the victim of a federal crime. Bringing in law enforcement is very important, can be very helpful for the PR process to talk about how you're working with law enforcement in relation to an incident. Well, you know, if an incident becomes public, we're often dealing with news reporting agencies, dealing with the internet, and that news can pop up on its own. Folks can reach out for information. That's when we engage PR or community relations or communications internally to come up with the right communication strategy. The most important thing is you have a cohesive, coherent communication strategy through one point of contact. So the message does not get garbled, does not get changed along the way. It's not a game of telephone. You want to keep your message consistent. We've got all of our internal stakeholders, students, parents, faculty, staff, everyone else we have to deal with. When staff and faculty at an organization, at an institution, learn about an incident, their first question is usually, what about me? Has this affected my data? And then quite often the second question is, how can I help? So learning how to motivate people and learning how to manage the internal water cooler dynamic is very, very important in relation to an incident and something the organization needs to handle through advice with its incident coach. We've got internal stakeholders, trustees, senior leadership. We've got to keep them in the loop and communicate to them about what's happening. They, of course, get much more details than the general public and our internal stakeholders. Leadership has to be in the know and empowered to do the right thing. We've got the rest of the world. How many of us have seen an institution or an organization that's been hit by a security incident and thought, oh, those poor guys? Usually, hindsight is 20/20 and negative. The outside world generally looks negatively on institutions and organizations that have been hit. We've got to manage those impacts. So, and then very lastly, and a growing threat is the threat of litigation. Thinking how to communicate with courts, how to navigate litigation, which is now nearly guaranteed to come from just about any incident. It used to be the case that class action litigation was very rare. Now we're seeing class action litigation with notification levels in the hundreds or low thousands of affected individuals. Think about that. One single spreadsheet that has, say, a few hundred names, addresses, and social security numbers of employees or students or faculty members can lead to a class action litigation. Why? Because with the use of generative AI, it's very easy to spin up these complaints, and folks are getting paid, including because there's a lot of insurance out there to pay for these claims. So a lot of different players in the dynamic. That brings us to the process for engaging some of these third parties. Your first call should always be to that incident coach, your pre-approved cyber counsel. Now, some people push back at that and say, well, this is a security issue. Shouldn't I focus on putting out the security fire as fast as possible? Yes, but you need to have a plan in place to do that. And the only way you can protect those activities and putting out the fire, protect them with the attorney-client privilege, is by calling counsel first. And the good news is, if you have a plan involved, that call to counsel results in immediate contact with your DFIR vendor. The last thing you want to be able to do is the last thing you want to be doing is scrambling for that number, having an introductory call, meeting somebody or a support vendor for the first time during an incident, period. So calling counsel, absolutely important. This may be an important legal issue, may not, but just about every incident is a legal issue. Your DFIR vendor comes in. Data mining, as I mentioned, comes much later. Looping in the broker early on is very important because the broker will know best what the carrier will pay for. Your policy may say one thing, but the broker can be a very good resource, especially if the broker has a claims division to help get your claim through the carrier's process. Very, very important. So that's kind of how you reach out. Let's talk about why. Calling counsel, as I mentioned, is important because every incident that you go through has a legal aspect to it. Your systems have highly sensitive and reportable information, and it's important to determine whether those reporting triggers have been met. And there I've got the 4 primary elements of the attorney-client privilege. If you satisfy these 4 elements, have a confidential communication with an attorney and client for the purpose of rendering legal advice, that's when the attorney-client privilege attaches. And the important thing about that is keeping the communications confidential in the first instance. The communications between your incident coach and the organization, between the organization and the DFIR vendor in this triangle here, and kind of looping and data mining as I mess up my slide. Very important to keep all of those communications confidential, not to leak them to others, for example, to the staff or the general public or to the news, because that can kill the attorney-client privilege. So those are the elements of the attorney-client privilege and how to make that apply. Let's talk about the who. Now, I'm talking here about panel counsel and panel providers generally, not just counsel. If you look at your institution's insurance policy, you'll quite often see a listing of approved vendors. Sometimes it's right there in the policy. Sometimes they send you to a website. And using an approved vendor is a great idea because that's the only way that you'll get your claim paid for. The question is, who does your institution want to use? The most important question is not deciding on any particular vendor, but rather making the choice for the institution in advance, not treating the 800 number in your policy like your incident response plan and thinking, oh, I've got it covered because I can just call this number, and that's like using the bat signal and someone's going to come in and help me with everything. Now, using the panel that's there in your policy comes with risks. There are some very good panel providers, and there are some not so good panel providers. And why? It's because claims are up and income is down under these policies. The amount paid by insureds is not covering the amount that's going out in the first instance. So what do carriers do? They're looking to control their losses in this regard, manage their P&L. And so they will go quite often to the lowest cost panel provider. I've had a claims manager at a carrier recommend a DFIR vendor because the DFIR vendor was charging $200 an hour. Spoiler alert, the general going rate for DFIR vendors for insured matters is $375, $400 an hour. So if I'm getting a claims manager who's pushing someone just because they're the low cost provider, that doesn't necessarily get the best result for my client. And my client may want to go with that provider because it goes further. They get more bang for their buck, maybe, or at least their retention's going to be, they'll get more work under their coverage. But that's at least a decision that the institution should make in advance, and one that leadership should be involved in, that finance should be involved in. So keep in mind that dynamic, that the carrier is always trying to manage the carrier's risk in the first instance, and that may not be perfectly aligned with the institution's risk tolerance. Okay, so that's who and how those people get paid. Let's talk about the clock that runs in relation to an incident. So I mentioned reportable information and personally identifiable information. In all 50 states, data breach notification laws exist under several other regulatory regimes like HIPAA, like GLBA in relation to financial data. That's the Gramm-Leach-Bliley Act that covers financial institutions. There are reporting duties in relation to incidents. If there's unauthorized access to or acquisition of defined personal information, we'll talk a little bit about what that is, then that breach itself is reportable. It becomes a breach. Remember, that's a legal term of art. And then you have to provide notice to individuals and report it to relevant authorities. In New York, the reportable information is something like name or another identifier, plus something more sensitive like social security number, driver's license number, biometrics, financial account information. For higher ed institutions in New York, generally the concern that they have is with social security number. So social of students, certainly, social security number of employees. Whenever those data elements are lost, then that becomes reportable. How long do you have in New York? Well, that has changed and changed very recently. Here's the old standard. You had to provide notice to individuals and to the Attorney General in the most expedient time possible and without unreasonable delay, subject to the needs of law enforcement and determination of scope and impact of the incident. Let's unpack that. The last phrase was very important, subject to the determination of the scope and the impact of the incident. That's that analysis phase that we talked about. That's figuring out what's going on while your network is burning down around you. That was great news. You had time to take the time to focus on the conflagration that's going on and not necessarily focus on reporting in the first instance. Subject to the needs of law enforcement. Sometimes law enforcement will say, hey, wait a minute, we want to watch that bad guy in your system. Don't kick them out yet. Don't take that remediation step that you were going to take. That's very rare. If they want to do that, get that in writing in the first instance, because it's very hard to prove that request existed if it's not in writing. But then the first part, in the most expedient time possible and without unreasonable delay. What did that mean? Keep in mind, this is the old standard that's recently changed. That meant that you could only really mess it up. You could only really be too late in the eyes of the Attorney General. And in practice, it meant if it's a big breach, something with big impact, you better be pretty quick about it because people are going to be paying attention. If it was a smaller incident, maybe you had a bit more time, but you should still be pretty prompt with it. Okay, so that was the old standard in New York, and New York looked around. New York has never really met a regulation it didn't like, and in many other states there were hard and fast deadlines to report. And guess what? New York cut into the front of the line and has now become the quickest reporting statute in the U.S. No other state is quicker than New York in this regard. Some require preliminary notice, but when it comes down to the actual letters going out and the actual notice occurring, New York is just as fast as any other state, and it's 30 days from discovery. So that's from that fire icon that we saw, the boom that happens and the bad thing going on at your institution. 30 days from discovery. Gosh, that is really short. What do you know? 30 days after your system's been locked down, quite often you're not even up and running again. Very little. There is the same law enforcement caveat, but I'll tell you this. In my career doing this, which has spanned back more than a decade, we've only had one request from law enforcement to wait in this regard. So don't count on law enforcement to give you more time in relation to reporting. And in New York, that reporting deadline is very, very quick. So that's the amount of time that you have. What's the problem with these deadlines? They're nearly impossible to hit without prior planning and decision making. And even then, they're nearly impossible to hit. Even if you know all the data that's in every system, it takes quite often longer than 30 days to do the data mining to figure out what data was actually impacted. So by doing the preparation work in advance, you can ask good questions like, how will we determine the affected universe of the incident? Who's going to help us with notice? You know, that's something like a mailing vendor or an identity theft protection code vendor. Having those people lined up in advance will streamline the process. Thinking about how notice will be given. Will we be giving it by mail, by email, by telephone? You usually get data breach notification letters by mail because email and telephone bring with them certain legal requirements, advance notice, and also letters give you a certain bit of distance. Talking to somebody on the phone about a data breach is not a very comfortable situation to be in. But mail takes time, and getting those mailings out can really eat up a number of those 30 days that you have to report in New York. That results in the risk of over-notification. Over-notification is terrible because it's very disruptive to individuals. If you've notified someone and their data of a data breach and their data was not impacted, you're putting them through a lot of care and worry and other concern that you might be able to save them. And you're also creating additional risk for the institution because those people may end up being class action plaintiffs later on down the road. So over notification can increase risk, but it is itself an increased risk given this short reporting deadline. Other deadlines may apply. So with 50 states, for every institution on this call, you'd likely have students from maybe all 50 states, certainly a large number of states. And the requirements differ. The letters are different. Quite often you're setting out 2, 3, or 4 different forms of letter depending on the states involved. And so figuring out how to balance all of those requirements can take time and eat up those days that you have to respond or to notify. So that's the timing. I want to switch now from the institution view to thinking about threats that are on the landscape out there. And I want to start with non-threat actor threats. What's a threat actor? That's a hacker. That's what we call a hacker in these situations. I want to talk about non-hacker threats. And the first are plaintiffs' attorneys. As I mentioned, the risk of litigation has skyrocketed in relation to incidents. Here we have an outfit, Strauss Borelli, a plaintiff's firm who launched in relation to a Loyola Marymount incident, a data breach class action investigation page. These pages sprout up like mushrooms as soon as notice goes out. As soon as you send those letters, they can pop up hours after notification becomes public. Why? Again, they have these pages already drafted. Generative AI helps with all of the details, and it's easy to get up. Why do they want to get their investigation pages up so quickly? Because they want plaintiffs so they can bring a class action, be the first to the courthouse steps, so they can be lead counsel and get the biggest part of a settlement when settlement occurs. And most of these actions settle. So there's a lot of money to be made and a lot of quick money to be made with very little effort. Spinning up a website like this, a web page like this, takes very little time and effort for these organizations, and it happens very frequently. Why do these sprout up? You know, I mentioned public notice of these notification letters going up. Here I've got a little snip, a screenshot from the data breach notification list for Massachusetts. There I've got Loyola University highlighted. You can't, the text isn't great because of the snip, but in this case, that was, I believe, in March of this year. This page went up literally hours after this notice appeared online. So law firms are waiting in the wings to bring these lawsuits. And quite often, for most of my clients, the cost of litigation vastly outweighs the cost of all of those steps we talked about in the incident response world, dealing with counsel, dealing with the DFAR vendor. Those are all people you have to pay. But those losses, those expenses are often dwarfed by the cost and the risk from litigation. Because what's a class action lawsuit? It's a megaphone. It's a multiplier. You have one or two people who serve as lead plaintiffs. And depending on your notification universe, damages can quickly get into the 7 figures or higher. Certainly, plaintiffs' attorneys have dollar figures in their eyes, especially dollar signs in their eyes, especially if you have insurance. So that risk is out there and increasing. And because there is so much money involved, these guys are kind of pushy. This is a screenshot, or a picture at least, of a phone of a worker at a client where we had an open data security incident going on. And this was a direct message sent through Facebook to the employee. Obviously, the employee had identified on Facebook that they were employed at this organization. And the attorneys spun up this direct message, sent it to the employee and said, hey, have you been affected by that data breach? Call us. So, gosh, they're reaching out via social media. They have these web pages. We haven't seen them call yet. Many states prohibit that in under the ethical rules governing attorney practice. But they will do anything that they can within the bounds of the law to get these plaintiffs, these lead plaintiffs, lined up so they can bring their suits. How do you deal with this? How do you tell folks at your institution, hey, if you get outreach from an attorney, let us know? You plan in advance. You educate people to the risks that are out there, and you spread appropriate messaging. It used to be that all we were worried about are the bad guys calling, and they do that. When they steal your data, they'll find your cell phone number, where? On your email signature usually, or in some file belonging to the institution. And if you don't pay the ransom, they'll call. Well, not only are the bad guys calling, but the good guys, the plaintiff's attorneys, are calling or sending direct messages. And again, the only way to deal with that chaos, deal with the surprise and the intrusion that creates, is by talking to leadership, talking to stakeholders internally, and running through that process, deciding how your institution wants to react to something like this. If a rank and file staff member comes up and says, how should I respond to this? Looking like a deer in the headlights in relation to that, that question is not a good incident response strategy. All right, so those are the attorneys involved. Let's talk about security researchers. Now here, we've got a group of people who wanted to do something good and probably ended up doing something very bad, or at least that's a little bit good and a little bit bad at the same time. This is a snip from a website called ransomlook.io, and there are a number of these websites out there. Now, it used to be that if you wanted to find out about what was happening in the ransomware world, you had to know how to get onto the dark web, and you'd follow the pages of these ransomware attackers. Yes, they all have their own pages. They're branded, they're slick, but they're generally only available in the dark web because the index web would kick them off because they're all crime syndicates in the first instance. So a group of security researchers got together and said, hey, shouldn't we shine a light on that dark and kind of seedy area of the internet? Shouldn't we tell people what's going on these sites? And they did. Ransom Look itself is an open source project whereby people who find the websites of bad guys on the internet link them up for periodic scraping and searching by this platform. And they'll be repeated. They'll be uploaded here. So that people can see images of those dark web sites without going there, without going through the risk and time and trouble of getting to the dark web. Well, what does this do? It immediately brings everything the bad guys say into the indexed web that you can find through a Google search, for example. It gives them a megaphone, gives them a magnifying glass, a greater platform. What the bad guys do when they infiltrate your system and detonate their malware, they'll put you up on their wall of shame. They'll say, we've now compromised this university or this college, and they only have this much time to get back to us. Well, that was fine when it was in the dark web, and it kind of stayed in the darkness for a while. Only bad guys and folks who knew how to get to the dark web knew how to find it. Now it's in the indexed web, and that can lead to plaintiffs' attorneys keeping an eye on that college or university and getting their page ready for when notice comes out. Sometimes plaintiffs' attorneys can issue their investigation pages, launch their investigation pages on the basis of just something appearing on a site like this. So it's really interesting if you want to see how other institutions have been hit and kind of what bad guys are doing. But it's also a risk that your institution should be planning for. Someone at your institution should be looking on the dark web, or at least at sites like this, to see if your name comes up so that you can have advance notice if you haven't learned about your compromise yet. So that brings us on to polling questions. We've talked about non-threat actor threats. We're going to get into threat actors now. Let's talk about ransomware a bit more directly. Would your institution ever pay a ransom in a ransomware event? So plus, remember to click on submit for your answers. We've got an unlikely, we've got it depends on the circumstances. We have established factors on whether to pay or not. No nevers, maybe a few no nevers. I'm not seeing them here. Yeah, maybe a little bit. So primarily it depends, and a lot of unlikelies. So here's the attorney giving this presentation. Of course, as a legal matter, it depends on the circumstances if you're paying a ransom. Quite often I've had institutions that say we'll never pay the ransom, we'll never deal with the bad guy. We'll talk about dealing with the bad guy in a moment, but saying don't ever say never. It really depends on the circumstances. You can have situations where student health and safety is impacted, where if you have a medical center, for example, medical records are held hostage and you absolutely need them. So sometimes payment is necessary. We've had financial departments laid low by an incident because they've got a legacy server that they need to bring up for audit purposes, for example. And those legacy servers may be more fragile than others. So it really does depend on the circumstances. What's the right answer on how to address this issue? Think about it in advance. It's that 8% who have established factors on whether or not to pay. Those factors will change, but having that discussion in advance is absolutely key. Run a tabletop scenario where you're running through a ransomware, a simulated ransomware event, and bring leadership to the table and talk to them about whether they pay in a certain scenario and what kind of information they need to make that decision. All very important steps for that preparation phase. Okay, so I've got a lot of letters here. Ransomware as a service. That's what that says, and believe it or not, that's a thing. Ransomware attackers used to do the hard work themselves. They do all the heavy lifting of compromising your system and then dealing with you and collecting the money and dealing with folks who wouldn't pay and posting the information up on the dark web. Gosh, that's a lot of work. Sounds exhausting as I even say it. And they figured out, well, why don't we just franchise this out? We've got a great brand here. We've got some great technology. Let's let other people pay us to go do our work for us. Ransomware and most of these attacks generally are capitalism pure and simple. It's driven by a profit motive. And so they're looking to lower their overhead and increase their profits, and franchising this work out is one way to do that. That has changed the landscape a little bit. It used to be, back in the good or bad old days, if you were dealing with a certain threat actor group, you may have dealt with that group 3 or 4 or 5 or 10 or 100 times before, if you're an incident coach. And you know how they'll react. You can tell from communications kind of who you're dealing with maybe, and you can reasonably predict what they'll do in a certain set of circumstances. Now that's all out the window. You can go on the dark web and buy a compromise today for a very small amount of money, and enter into an agreement with the ransomware as a service vendor where you get 90% of the ransom, they get 10%. And you're off to the races. You have to literally press a button, the ransomware detonates, and then you're dealing with the victim. You need 0 technical skills to do this. So this can be a student, this can be a staff member, it can be just someone who wants to get into the business of being a criminal. It can be a state actor. So you never know who you're going to get. Are you going to get a very good thief, Hans Gruber? You're going to get someone who is looking to pull every string to get as much money as possible? Are you going to get somebody who's looking to make a deal, Monty Hall, and looking to kind of get money quick and get out of there? You never know. Or is it somebody who's never done this before and is worried about law enforcement, or someone who really needs the money and won't be flexible at all? All dynamics that you only figure out once you're dealing with that individual or group. When these syndicates farm out and franchise out their compromises, they do have rules. They do require a certain amount of money back, and so that overhead for the ultimate attacker, the person that you're dealing with, is important. And some of the rules may say, well, you can make deals with people, but you can't go under 50% of the original amount demanded. Keep this in mind. If you're ever involved in a ransomware incident, the ransomware demand itself can often be flexible. It will quite often start at the full amount of your insurance because they want to see what coverage you have. Or they'll take a stab in the dark that they think equals the amount of your insurance, and then they can make a deal. But some syndicates won't let their franchisees go below 50%, and so or even a higher number. So you may never know what level of flexibility is there until you start dealing with these folks. And we're going to look at a ransom note in a minute. The ransom note can give you an idea as to who you're actually dealing with. Is this a organization that's out to make a deal or not? This is one of those ransom notes, and this is from a group called Akira, still very active. Many groups are kind of like a flash in the pan. They'll be very active, and then law enforcement can take them down. That's happening more and more frequently now. But really, it is like a Hydra or whack-a-mole. These are people, right? Just because Ransom Hub, by the way, is a very prolific attacker that law enforcement's recently taken down. If you take down the ransomware site and take down their technology, take down their servers, you haven't taken the people out of the equation. Those people move on to other organizations, and they'll sprout up in another group, or they'll start up their own group here or there. Akira is about 1.5 years old, or at least has been around for about 1.5 years, which is extremely old in this landscape. But let's take a look at their note. First of all, these notes are formulaic in the first instance, so don't be scared by all of the threats they make. The threats are usually common and often happen, but not always true. For example, here they say that they have, in the first highlighted area, we've decrypted all of your backups, virtual and physical. Everything that they have touched has been completely removed. And they've also taken a great amount of your corporate data prior to encryption. Let's break out those two things. What's ransomware? Ransomware in the good or bad old days used to just be one thing. They'd lock down your systems and demand money so that you could access your systems again. Now, ransomware almost always has what's called double extortion involved. They almost always steal your data. Only once in our experience did they say that they took the data and then told my client after they paid the ransom, oops, sorry, we actually didn't take your data. Why do they do this? Especially at colleges and universities, our tools have gotten better. We've deployed technical tools that protect our systems better, that will stop ransomware and immediately remediate. So their first attack has been thwarted. Data is a lot easier to get and a lot easier to steal than it is to decrypt a whole system and bring down a college or university. Why? Because our data hygiene processes are terrible. Look in your email box, look on your desktop, look everywhere. Not just you, everyone in your organization is really bad about controlling the data that they save and keep and move to places where it likely shouldn't be because data, it's very easy to do so. Storage is now cheap. And there's very little impetus for an organization to get rid of data until they suffer an incident and suffer the evils of data theft in the first instance. So that's what they threaten in the first instance. And usually they do both. They try and encrypt and steal your data. Some syndicates are now only stealing data and not bothering with encryption, but Akira is still encrypting systems. They don't want to ruin you financially. Oh, that's nice. Well, it's actually very true. What they want is enough money to keep you alive and keep you operating, because that's their business model. If you pay us, you can keep operating, and we'll give you the decryption key, we'll give you back the data, and everything will be fine. So they want to get to that Goldilocks zone and right size the price. And that is part of the reason why they are so willing to negotiate. And they want insurance in the loop. If you have insurance, let us know, and we will tell you how to use it. Well, that's very helpful. They do have customer service. They have a chat, a blog. Sometimes they have real-time customer service that will help you in this regard. Spoiler alert, or at least a pro tip maybe, don't tell the bad guys about your insurance because that will just tell them how much you can pay. They're not there to help you. They're there to help themselves. So don't fall victim to that maneuver by an attacker. Okay, here, a lot more text on this page and a little bit more hard to read. But if you pay us, you'll be back on track within 24 hours, approximately. That is rarely the case. The decryption keys that the bad guys sell usually work. That's part of their business model, part of their value proposition. But decrypting takes much longer than encrypting. Encrypting can happen in a matter of minutes. Decrypting can take days, especially with structured data sets like databases for your financial systems. Sometimes they won't come back at all. So that promise is maybe a hollow one. They will let you try before you buy. If you send them a decrypted file, they will unlock it for you to prove that they have the key. That's important. They also say they'll give you a security report to tell you what happened at your organization, and it's of great value so you can get better and learn lessons and tighten up your security controls to avoid this happening in the future. Don't you believe it? They do kind of generally tell you what happened. I mean, the good or bad news is that most of these attackers get in through very mundane windows or vulnerabilities that are left open. Phishing is the #1 access point for ransomware. Also, the bad guys don't spend a lot of time or effort putting together these reports for you. They're very high level. Why? They're not making any money off of it. So you really don't get anything of value out of that #3. And then as for your data, if you don't pay us, we'll try and sell your data. Well, think about this. What they usually do is post it on their dark website. It's going to show up, as we'll see in a moment, on the indexed web repeater sites that we've seen. But it's important to consider the amount of risk created by bad guys getting your data. But the kinds of data that they get are often already in the dark web. So although it's important to guard against these risks, keep in mind the incremental risk to affected individuals because their data, a social security number, for example, is posted in the dark web, is likely nil. Their social security number is also is likely already for sale somewhere else. We're more than negotiable. We'll make a deal. And you can tell us, you can use our chat to tell us what services you want us to provide, period. So do you respond to these folks? No, I've already said that. Use your professionals to respond to these folks. We negotiate with them frequently. We know how to deal with them and get the right kinds of responses. This is an actual screenshot with some things changed of the type of data that they steal. What do they look for? Finance, HR, admin, sales. This was obviously not a higher ed institution because they've got sales in there, but they do look for finance. They do look for HR because they know how to create leverage in relation to the data that they steal. Think about this with your chief information officer, with your security team, so you know how your systems are structured and you know where the risks are. Think about this in relation to your own systems and where you keep data, because the bad guys are looking for getting any leverage that they can. And here's an example, higher ed institution. This is available on that ransomlook.io website. Unfortunately, I had to black out all of the information, the passport number and contact information of these individuals. But the bad guys used to be smash and grab. Now they look for the juicy stuff. They look for stuff that will give them leverage. They're looking for anything that can shock and awe, and these kinds of things really do shock and awe my clients and get them thinking about payment more quickly than they otherwise would, especially if the affected stakeholders get to know that their passports are available now on the indexed web, not just the dark web. So they steal your data to try and get leverage. Let's talk about the back end. About when you're providing notice ultimately. So, for example, in a situation like this, if this person was a New York resident, this is a German passport, but they can be a German national and a New York resident, and this kind of incident could lead to a reporting obligation. Let's talk about how that happens. You send out letters, usually by mail. You've seen these letters. You've all likely received one or more in the past. They offer credit monitoring. They offer a call center number, very formulaic, and you can only really get them wrong if you do them on your own. So certainly work with outside experts to put together the letters. Then you need to report to, under many applicable regulations, report to the state authorities. In New York, you've got to report to the New York Attorney General's office. That's through a portal. If you have an incident coach in place, the incident does all of this reporting. Other states, it really depends how you need to report. Sometimes it's a letter, sometimes it's a portal. HIPAA, if you're covered by HIPAA, has a portal. GLBA, you're reporting to your regulatory agencies. The Department of Education wants to know in certain circumstances if you've had an incident. All of those requirements can be very complex, so it's important to work with your incident coach in that regard. And some of these regulators follow up. Some states, Indiana is very well known for this, will follow up even with a very small incident. So if you have counsel doing this for you, counsel will be the first point of contact for those regulators as they reach out and ask for more information and maybe investigate you in relation to an incident. Let's talk about the call centers generally. How do they work? Well, they don't work like this. This is the picture of a person who's never called a call center in the first instance. The people who call centers are not happy. It's not a nice experience to call a call center and learn more about a data breach, but you can provide good information. It is limited information, really limited to high-level talking points about what's happened at the institution and how the affected individual can protect him or herself. Why do we offer a call center? It's required under law in many circumstances, and it is the right thing to do for those who want to have someone to speak to in this regard. Okay, our last polling question. What level of risk do you think your institution faces from email compromise? Limited. We police the amount and type of data we kept in email. Moderate. We may have some risky data there. High. We regularly use email to share sensitive data. I don't know. We don't regularly assess the risk arising from email use and retention. So if you click on the poll and respond, I'm going to respond with at least a moderate. Limited is getting a good number of hits. We got some moderates, not high, not many high, and several don't know. Okay, what I'll tell you all is email is the absolute worst. It's the worst way to communicate. It's the worst way to share and store data. It certainly should not be used in the first instance or even at all as a storage location. We've only had one incident where an email box was compromised and it did not result in notification. Here is an example for you. For someone from the finance function, one mailbox was compromised. It was someone in senior leadership in finance. Repeat phishing offender. What do you do there? Somebody who repeatedly fails phishing tests at your organization. This came in because an outside vendor was compromised. It can often be a professional services vendor or someone else you're using. This was a payment service that the client was using and that dealt with the finance function. So the phishing email looked very, very good in the first instance. In fact, it was from a valid email address because that vendor was compromised. The bad guy was in there for 6 days. Some alerts were missed at the organization, but that often happens. That detection phase can be delayed because of user error. The bad guy created a mailbox rule that was sending out emails from the finance person's account to get in the way of a wire transfer. Counsel was engaged, but before that point, the client had created an internal report. Now, remember what I said about the attorney-client privilege? It only attaches to communications between attorney and counsel. By creating a report in advance before counsel is involved, you can have a report out there that may be available to plaintiff's counsel, may be available to courts or administrative agencies and regulators. So really, internal reports can be important, but you need to consider how the privilege plays in that regard, how it can protect those reports if you engage counsel on the front end. We engaged in data mining, and from that one mailbox, we found 137 reportable Social Security numbers and other data elements from all 50 states. And these were only employees at an organization that only employs a few thousand individuals. How do you get from a few thousand to 137,000? Turnover. Think about your institutions and the amount of seasonal work you have, the amount of turnover that you have among staff, faculty, etc. You may employ a few thousand today, but going back 4, 5, 10 years, that can quickly get up into the 6 figures of affected individuals. This spawned over a dozen class actions and is a very big issue for the organization. So take that into consideration in relation to email. So as I said, I got too much to go through, so I'm going to skip to my lessons for the last 30 seconds I have. Ask dumb questions. Think about your insurance. Think about the third parties that you need to engage in this regard. If you don't know, make sure your organization is thinking about all of the things we've talked about today. Gather that team together. If you're not on the team, ask if someone from your department should be. Figure out who is on the team for finance, because finance should certainly be at the table. Test your plan. Go through an incident response tabletop activity. Very key, fun. Take homework from that tabletop and learn how to get better. Make those tough decisions in advance. Think about payment of ransomware. Think about who's got the responsibility to disconnect the internet and disconnect systems. All very important on the front end. And then get rid of your data if you don't need it. Think about what's in your email, what's on your desktop. Limit the exposure that you have, because every piece of data that you have is a risk. Okay, so it's right at 11 o'clock. I'll turn it back over to the Bonadio team to close us out.
Thanks, Paul, and thank you everyone for attending today. With that, we'll end the session.